Your property tax bill went up again. The envelope showed up in the mail. You opened it, and the number inside was bigger than last year. Maybe a little bigger, maybe a lot. And you did what almost everybody does. You looked at it, you felt that small, sinking feeling, and you set it down on the counter with the rest of the mail. Here is what I need you to know before you ever do that again. That envelope is not a bill, it is an opinion, and it comes with a clock attached to it, because printed somewhere on that page is a deadline. In most places, you have somewhere between 30 and 45 days from the date on that notice to raise your hand and say, I think this is wrong. Let that window close, and the number is locked in for the year. You pay it. And then next year, the county builds the new number right on top of the old one. I'm Sarah. I spent 20 years on the closing side of real estate, in title and escrow, at the table where these deals actually get signed. I have read more of these notices than I can count, and I have watched careful people overpay for years because nobody ever told them the number on that page is not a fact. It is an estimate. And estimates can be wrong. By the end of this video, you will know how to tell whether yours is wrong, the free letter that starts the whole process, the evidence that actually wins, the 4 arguments that lose every time, and the exemption a lot of homeowners have never claimed. Let's get into it. Step number 1. Understand what you are actually holding. That notice is not telling you what you owe. It is telling you what the county believes your property is worth. That figure is called your assessed value, and everything else flows from it. Your local government sets a tax rate. The county sets your assessed value. Multiply the 2 together, and that is your bill. 2 separate numbers, controlled by 2 separate offices. You cannot argue about the tax rate. That was set by your city, your county, your school district, but the assessed value is the assessor's opinion of what your home is worth, and an opinion is something you are allowed to challenge. So here is the first thing to do. Find the line that says assessed value, or appraised value, or market value, depending on where you live. Write it down. Then find the deadline printed on the same page and write that down too. Those are the only 2 things on that page that matter right now. Step number 2. Understand why there is a real chance it is wrong. People assume the county measured their house. The county did not measure your house. In most places, nobody has walked your property in years, and the value was produced by a formula that looks at your neighborhood, your recorded square footage, and recent sales, and then applies the same math to thousands of homes at once. Formulas make mistakes. Experts estimate that somewhere between 30 and 60% of taxable property in this country is assessed too high, and it is not spread evenly. Researchers have documented a pattern where the less expensive homes in a market get assessed at a higher share of what they are actually worth than the expensive ones do. In Detroit, a University of Chicago study found that roughly 65% of the lowest value homes sold in one recent year were assessed at over half their market value. Now, here is the part that should get your attention. Fewer than 5% of homeowners in America ever challenge their assessment. Fewer than 5%, and of the people who do, somewhere between 30 and 50% get a reduction. Read those 2 numbers next to each other. Almost nobody tries. Most of the people who try win something. So do this. Go to your county assessor's website and search your own address. Everything they believe about your house is public, and it is sitting there waiting for you. Step number 3. Pull your property record card, because this is the easiest win there is. Your property record card is the county's file on your home. It lists every physical detail they have on record, and you are entitled to a copy. Call the assessor's office and ask, or download it from their site. Then read it line by line, and I mean line by line. Square footage, year built, bedrooms, bathrooms, lot size, condition rating, whether the basement is finished, what kind of garage. Errors on that card are the single most common reason a home is assessed too high. A basement gets recorded as finished when it never was. A 3-bedroom gets entered as a 4. Square footage gets carried forward from a permit for something that was never built. Overstate the square footage by just 10%, and the assessment that comes out the other end can be thousands of dollars too high. Here is why this is the best evidence there is. Everything else in an appeal is a debate about value, and reasonable people disagree about value. A wrong bedroom count is not a debate. It is a factual error in a government record, and once you document it, there is very little to argue about. So, pull the card. Go down it one line at a time. Circle anything that does not match your house. If videos like this are useful to you, I do this every single week. Subscribe to the channel, and let's get right back into it. Step number 4. Gather your comparable sales. If the record card is clean and every number is correct, then your argument is about value, and you make that argument with comparable sales. Comps. You want 3 to 5 homes sold within roughly the last 6 to 12 months, close to you, genuinely similar in size, age, condition, and features. If they sold for less than what the county says your home is worth, that is your case, and it is a strong one. And this is where people accidentally hurt themselves. A bad comp is worse than no comp. Bring the county a house 400 square feet smaller than yours, or a sale from 4 years ago, and you have not just weakened your argument. You have made yourself look like someone who does not know what they are looking at, and everything else gets weighed accordingly. Pick fewer comps and better ones. For each one, write down the address, the sale date, the sale price, and the square footage. 4 lines. That is the whole exhibit. Step number 5, send the free letter first. This is the part almost everybody gets backwards, and it is the reason for the title of this video. There are usually 2 ways to challenge your assessment. There is a formal appeal, which goes to a board, and depending on your county, that can carry a filing fee. $40 or $50 in some places, $120 in San Francisco, nothing at all in plenty of states. But before any of that, most assessors offer an informal review. You write to the assessor's office. You say you believe the assessed value is too high, and you attach what you found. Your corrected record card. Your comps. Photographs if the condition of the house is not what they think it is. In most places, that informal review is completely free, and a meaningful number get resolved right there, without a board, without a hearing, without a fee, because you handed a busy office a documented error and made it easy to fix. Most homeowners never do this. They either do nothing, or they jump straight to the formal appeal and pay for something they did not need to pay for yet. One more thing, because this is the fear that stops people. A lot of homeowners are quietly afraid that if they speak up, the county will look harder and raise their assessment out of spite. In many places, filing cannot raise your assessed value. It varies. So check your county first, but the nightmare people are imagining is usually not on the table. So write the letter. Send it to the assessor. Do that before you file anything formal. Step number 6. Know which arguments lose, so you do not waste your one chance on them. Here is what I hear all the time. My taxes went up 20% this year. That is outrageous. And I am going to tell them exactly that. I need you to stop right there, because that argument cannot work. Remember what we said at the start. The board that hears your case controls your assessed value. It does not control the tax rate. The rate went up because your local government raised it. Complaining to an assessment board about your tax rate is like arguing with the cashier about the price on the shelf. Wrong room. 3 more that go nowhere. I cannot afford this. Genuinely sympathetic. Every board member has heard it, and none of them can act on it, because the question is what your property is worth, not what you can pay. This is unfair. Not a legal standard. My neighbor pays less. Also not a legal standard, and it invites them to look at your neighbor instead of at you. There is one thing your appeal is allowed to be about. Is this number an accurate reflection of what this property is worth? That is it. So take every one of those sentences out of your letter before you send it. Step number 7. Claim the exemption you may already qualify for. This one is separate from your appeal, it runs on its own deadline, and for a lot of people it is worth more than the appeal ever will be. Homestead exemptions exist in more than 45 states, and they are the single most commonly missed break in American property tax. If this is your primary residence and you have never filed for one, that is the first phone call to make. There are also senior exemptions, typically for homeowners over 65, veteran and disabled veteran exemptions, and disability exemptions that are not limited to veterans at all, available to any homeowner with a qualifying disability. Here is the piece most people miss. Many states let you stack them. In Texas, someone over 65 who is also a veteran with a service-connected disability can potentially combine the homestead exemption, the over 65 exemption, and the disabled veteran exemption. In some cases, that takes the bill to nothing. These have their own deadlines, and they are nothing like the appeal deadline. Florida is March 1st. Texas is April 30th. California is February 15th. Miss it and you wait a full year for the next one. So call your assessor's office and ask one question. Which exemptions am I currently receiving? You may be surprised by the answer, and it costs you a phone call. Step number 8. Understand what a win is actually worth. When a homeowner wins one of these, the typical result is a reduction of about 10 to 15% in assessed value. On the average American property tax bill, which now runs around $4,400 a year, that is often more than $500 back in your pocket. But the annual number is not really the number. That reduction does not last 1 year. It stays in place until the next reassessment, and every future increase gets calculated from the lower figure instead of the higher one. You are not correcting one bill. You are correcting the foundation every bill after it gets built on. Let's bring this together. 8 steps. Find your assessed value and your deadline on the notice. Understand that the number came out of a formula, not an inspection. Pull your property record card and check every line against your actual house. Gather 3 to 5 genuinely comparable sales. Send the free informal review letter to the assessor before you file anything formal. Strip out the 4 arguments that cannot win. Call and ask which exemptions you are receiving. And understand that a reduction keeps paying you every year afterward. All 8 have one thing in common, and it is why this money goes uncollected year after year. Nobody is coming to check this for you. The county is not going to call and tell you your square footage is wrong. The formula that produced your number cannot see your house, cannot see your unfinished basement, cannot see the roof that needs replacing. It only knows what is in the file. And the only person with any reason to look at that file is you. Fewer than 5% of homeowners open that envelope and do anything about it. Be one of them. Now, if you own your home outright and you think that means the paperwork side is behind you, there is something else you need to see. I cover exactly that in this video right here.